Great. Hope you enjoyed lunch. I'm David from dWallet Labs, for those who missed the first part of the day. And at Encrypt, we kind of put a spotlight on researchers who do real-world research in modern cryptography, but a very large part of doing modern cryptography and advancing state-of-the-art in real-world scenarios is also how that research gets funded. And in academia, there's a pretty clear process on how that happens. And it's not really connected to the real world, right? And it doesn't need to be. It's more about just scientific advancement. But in the real world, or in the, let's not call it the real world, in the for-profit world, things are different. And I'm really happy to have here for venture capitalists who are focused on research and deep tech in Web3 and in modern cryptography. And I'm actually personally very excited to hear some of their answers as an entrepreneur who does real research. So maybe we can start with a round of introductions, and you can just tell us a bit about you, your background, your fund, and we can go from there.
Hello. So I can go first. My name is Nihal. I'm an investor at Pantera Capital. So Pantera is a $3 billion fund based out of the US that focuses solely on digital assets. We're investing out of a $1.25 billion fund now. We've been in the Web3 space for a very long time, since I think like 2013, 2014. Some of our notable hits, probably like Arbitrum, Starkware. We did the seed for both of them, Polkadot, etc. Over 200 portfolio companies. Myself, I don't come from a cryptography background. I come from like a technical AI ML background. Did my bachelor's at Berkeley. Wanted to do an AI startup, failed. And so I went the failed entrepreneur to VC route. And so I was actually an AI ML VC, but then I got the blockchain bug. And once I kind of saw the rabbit hole, I couldn't get out. And so I switched jobs from VC to 0x, where I was working product over there. It's a liquidity aggregator, if you guys have heard of it. A year ago, I switched roles, went back to the dark side being a VC. And so I've been at Pantera ever since. So I focus mostly on the DeFi infra stuff, including ZK. So yeah, happy to be here.
Hey, everyone. I'm Caleb from Big Brain Holdings. We're a pretty old fund in the space, been around since 2015, 2016, just investing across the entire crypto stack. Big fan of dWallet Labs, of course. Myself, I'm fairly new professionally speaking to the space. I was a passive investor since 2017, started deploying smart contracts in 2020, was on the founding team of Franklin DAO, which is a governance and consulting group in the space. And yeah, happy to be here.
Hi, everybody. I'm David from Lightshift. I'm a partner in CTO. So Lightshift is an early stage fund focused mainly in investing in projects that can have, let's say, a meta impact in the industry. We have our own engineering team that not only helps us do research and due diligence in the space, but also contribute directly to the projects that we actually invest in. That's essentially from the 0 to 1 phase. So what we consider the most critical phase of innovation. So we're very happy that we're lucky enough to have had the chance to invest in dWallet at an early stage, and have been working with them since then. And this is probably one of the best cases of what we typically do when we invest. Myself, my background, I was a founder for around 20 years, mostly playing the role of co-founder CTO. At the fund, I lead the engineering team.
Hey everyone, I'm Alexander. Recently launched Reforge, early stage fund focused on 3 core areas: blockchain, network infrastructure, privacy, enhancing tech, so obviously relevant to today, and then the intersection of crypto and AI. But specifically, cryptography, not necessarily digital assets in AI. Launched that about a month and a half ago, so still early innings of the fund. Previously was at Shima Capital, another early stage crypto fund. I was head of research there and on the investment team. I came from a technical background, studied applied math, computer science in undergrad, got into crypto in 2012. I ran a bot farm in college, a RuneScape bot farm, and I was sold my accounts for Bitcoin. And then I've kept up kind of my work in math in my career. So I was building AI products at Teeds, an ad tech startup, originally founded in France. We were acquired in 2017 by Altice. So I was really focused on kind of the AI ML side as well. But then being part of the whole surveillance capitalism and kind of enabling that side of the world, I realized that I should probably switch over to what we're focused on and sovereignty and empowerment of human autonomy. And so that's kind of what led me to fully transitioning into crypto full time and spend a lot of kind of my time bridging the gaps between being very research heavy and investing.
Yeah, can you hear? Okay. Thank you so much for being here, and I'll also try and leave some time in the end for questions from the audience, which usually is relevant after this kind of panel. But maybe to kick things off, I'd like to hear a bit about your high-level thesis. What do you believe are the greatest opportunities that are created by modern cryptography primitives like ZK and FHE and MPC? What do you see as the largest opportunities and why, if you can just give a very high-level thesis?
So I can take a stab at it first. There are always a lot of opportunities just in general. And if you're doing deep research, I don't think you need to time the market as, just when the bull run's happening, to be honest with you. But things that I've seen specifically or I'm paying attention to a lot is kind of encrypted mempool specifically on kind of the sequencer side. There's this big milestone that's going to happen eventually when people are going to decentralize sequencers and L2s. And the fact is that using, ZK or just cryptography in general to encrypt mempools, because MEV and front running and all of these are huge issues just in general, and encryption is going to be the key to solving that. And more so than even the decentralized sequencer part. So just in general, when it comes around MEV and the type of encryption around the infra around there and what do you want to use, TEEs, or different types of ways to kind of solve this specific issue. And so that's definitely a big part of an application basically of a lot of the cryptography that I see people or in the VC space, or namely me, I'm definitely looking into, but I'm sure others are too. Again, there's a lot of hype around FHE. I think there's a lot of interesting kind of experiments running in FHE. I think FHE is a pretty, I don't know. I still don't know, actually, and I would love to hear from the other members of this panel if it's more hype than not, because it's been there for a very long time and it's pretty slow. So I think groundbreaking stuff happening in FHE is also a big open space. I don't think, even though a lot of money has gone in maybe in the past couple of months, I still think there's a long ways to go before FHE becomes practical use for specific for practical applications in blockchain. But I'm happy to be proven wrong. I don't know a lot of things. So yeah, that's from my side.
I'd like to say first off that FHE is very new. It's 2009 is when it was invented, so we still have a long ways to go. But yeah, so on the ZK side, obviously ZK brings a lot of economies of scale to Ethereum in particular and a lot of other blockchains. That's why there's been a lot of capital pouring into that space recently, or not recently, but the past few years. FHE, there's some people like to comp it to ZK, but it really just brings the privacy side, right? It doesn't bring the scalability. In fact, it brings the opposite. So kind of like Nihal was saying, it's super slow right now. So really figuring out ways to make it faster, whether it's through hardware or just new algorithms, seems like a super interesting space to invest research in right now. Also on the threshold side, I think there's a lot of improvements to be made right now. You look at kind of all the chains that Zama is putting out right now that can only have 5 to 10 validators running. You need a 1/3 of them to decrypt. So it's not that secure, not that private. So there's still a lot of room to grow on that side. So super excited about that as well.
Yeah, maybe a couple of things. Reiterating on the FAG part. Yeah, it's quite new. I think I'm old enough to remember when people would talk about SSL being mainstream use in the web, and there's no compute power to be able to actually sustain it in most cases. And today we all use it every day in pretty much everything. So I think that's, you asked about the thesis and maybe hinting a little bit how you have to approach this type of technology from an investment perspective. You have to not be cynical. You have to be skeptical. So, and skepticism comes from, of course, a place of trying to find the truth and a lot of patience, right? Because it takes a lot of work to understand where some of these breakthroughs that will eventually actually make Web3 mainstream. For them to happen, you need people like people in this room to have the time and the resources to be able to do it. But ultimately, just like cryptographic primitives was essentially what allowed blockchain to be a thing, to be a proof of concept initially, these are the technologies and the research that is being done by some of the people here, what will actually allow it to become mainstream. So yeah, not sure. It's a bit of a generic answer, but I think just to complement a bit.
Yeah, I think trying to group everything that we're looking at into a thesis is really difficult. But I guess the way that I kind of think about it is first, a big core thesis is just bridging all of the gaps that exist in existing tech. So like, for example, the scalability concerns, the computation heaviness that exists within some of these, private PETs. I would also say that there's a really big opportunity associated with just understanding how this will become applicable and how it would be implemented by on the application layer, and assessing what is the education and what is the what is needed from the application layer to say, hey, we can actually leverage this in some of our products in a scalable way. So I think that's just such a macro level view that we have to have, because at any point, right, very similar to the AI side of things, where you have a transformer paper come out and then it kind of changes the approach, right? You go from a very old form of, or I guess relatively older form of supervised learning to transformers, and how transformers change generative AI and LLMs, right? And it becomes something that all of a sudden you have to, you kind of can't play catch up at that point. You already have to have had some understanding associated to it to be ahead of the game. So in terms of kind of more forward thinking stuff, I think quantum resistance cryptography is something that is top of mind, just purely based off of the impact that it'll have in the future. But it could be 10, 20 years from now, 30 years, if not more. But just ensuring that stuff remains top of mind, because at any point it could be more relevant, is important. And then just how everything interops together, right? So obviously the cryptography plays a big role in how it impacts the AI side of things. And so, what does that look like? So for instance, I think a more specific area is around like kind of bio-enhanced or bio-driven private keys. I think we as individuals are nature's private key in a way. And so how do we kind of ensure the security of that? How do we implement that in products, and how does that relate to identity on chain, for instance? So I think that there's so many derivatives associated to kind of the topics that we're talking about. So kind of just piecing things together in a different lens is, I guess, my thesis for now.
Great. Thank you for that. So maybe let's get a bit more concrete. So I can say that as a co-founder of a company that is based on research, I always felt like I wouldn't want to be on the other side, talking to crazy entrepreneurs with crazy ideas, where they themselves are not really 100% sure they'll be able to achieve the research that they need, and trying to make those decisions. So I'm really curious to hear how, when you look at it an opportunity or a company that does research, how do you evaluate it? What's your process? How do you try and determine whether they'll be able to do the research that they need to do in order to make that a reality?
Sure, I'll take this. So I guess I've been fortunate enough to be in the space for a long time. So I think, or I guess particularly around blockchains, and so I think one is understanding what I have, which is not much compared to most of you guys in the room. Definitely the dumbest one here, but I think for me, so I studied cryptography and distributed systems in grad school. I studied under R.A. Jules and the IC3 guys and at Cornell, and so I had a really good opportunity to kind of be also in the room with very intelligent people who kind of guided me along the this world that we're in. And so I think from that perspective, it's having some level of deep domain expertise and technical acumen that aligns yourself with the founders that I'm talking to. So one is just being fortunate and knowing that you have that background and then saying, okay, like these are the things that that fit within the realm of my understanding. And if it doesn't, then I go out and speak to pretty much everyone else that is tangential or I guess related to the particular topic at hand. So it takes a lot of time. Is effectively what it is. So I think that that's it. It's just a very aggregate, comprehensive approach to data gathering. Trying to do it in person is incredibly important, because at the end of the day, when I'm talking to founders, it's very difficult for me to assess not just my understanding of what they're building, but can they build, to your point, can they eventually build out what they are focused on or what their objective function is? And then how do I underwrite that? Like, what are the questions that I have to ask for then a founder to let me know or persuade me that they are capable of achieving that goal? And I think doing that in person is way easier, or assessing that in person with the founders or with the team is way better than doing it virtually. And so I think that that's incredibly important. And I think that so we focus predominantly on early stage investments, pre-seed, seed, and so we have very little data. And given and on top of that, being more on the technical side and research driven side, there's just so many unknowns. And so then it becomes a lot about the character of the founders. And so I guess this is a bit more cliche, but like I'll play poker with my founders when it comes to understanding how they assess risk, how they react to me taking their money, or how they react to them taking my money. So I think there's just so many soft skills outside of specifically the research or whatever the company is focused on building that impacts the end outcome, or essentially the journey to achieving that outcome. So it's a very abstract process, but hopefully those are some, I guess, 3 points that I just wanted to bring up.
I'll just add to that and say that if we knew how to build all this crazy stuff that you guys are building, we would not be VCs. So that's for one. I would say like the process for assessing like really cool new deep tech is twofold. So like I think we're very fortunate that cryptography is super new and that it doesn't take that much time if you really study it to get up to date and then continue learning. But it's actually very difficult to contribute, right? It takes a lot of effort to contribute. And so that kind of, if you put in the time there, like I studied cryptography under Tal Rabin in undergrad. And so that gave me like a bit of a boost, like a bit of like a bullshit filter, per se, on some of the white papers that I'm reading. Aside from that, it really just comes down to referrals and building up your network in academia and, understanding like who's really the most cited, who's on the cutting edge. I know Svika's in the audience today, so he's a great person to get references from and see who he's working with and what they're building. So I'd say that's like another big indicator that we look at.
Yeah, maybe double clicking on the founder traits just in general from like a founder perspective. If you're going to a VC like Pantera, like understand that like my technical background will not be in cryptography when you're talking to me. So the thing is that when we're looking at a very deeply technical kind of project at the early stages, we're looking for like, and this is super cliche, but it's actually very important because you'll be talking to VCs that are not at the same technical level as you, and you'll be explaining this to a host of individuals that will not be at the same technical, level as you, and it's to be like a truly kind of a visionary that can break down what you're building. Like in the end of the day, yeah, we don't expect it to be a finished product, like project when you're presenting it to us. We understand there's going to be like levels of research that's going to happen. Like when we did the seed of Arbitrum, like fraud proofs, like they were the first to implement fraud proofs, but I mean, we didn't know when that was going to happen eventually, right? And so the thing is that you need to be able to break down your concept and like explain it. And those are, we found, the best founders specifically. When you're thinking of like building a company on top of deep research, we're looking for like, and there are different types of profile. Like the charismatic leader, you don't need to always like do public speaking and whatnot. But the fact is that there are different profiles, but we're looking for like a visionary who really believes in the mission that they're actually, striving for. And that's very apparent. Like, and if you see all the PhD leaders in the space, like Sri Ram, you can tell like there's a certain profile of the people who make it. And it's like people were saying in this panel, those kind of soft skills are definitely something that we're looking for, especially when it's really really early and the research is very let's say dubious in the sense that will it be reached. So we're looking for someone who at least has their conviction, because if you can't convince us, and we don't know anything about it, how are you going to convince people that know something about it, and it's still kind of like at the off chance? So that's definitely something that we look at when we're assessing whether they can not only like complete the research but also build a company on top of it.
Yeah, I mean, can you? Yeah, okay. Yeah, a lot has been said, so I'm going to try to not repeat too much on any of the topics already expressed. I would say that from Lightshift's perspective, because we have the characteristic that we have an engineering team in house that essentially tries to cover as much as we can in a lot of these technologies. It does give us an advantage than a typical early stage investor. But at the end of the day, we can't do it alone, right? So we need to, just the same way that when we approach something holistically using the entire team in-house, we do have to go outside and rely on peers that we recurrently go to around specific technologies, and essentially also depend on their opinion to form our own opinion, which at the end of the day has to be one. I would say that maybe to reinforce a little bit of the things that have been said as well, what Nihal was now describing about the founder, they don't have to be super charismatic, but they have to be charismatic enough to convince not just the outside world, but I would add to convince their peers to actually join them, because it is the same case for them. They can't do it alone. And typically, actually, the founders are not necessarily the most technically capable. They can be, but it's not always the case. But they're technical enough that they're able to essentially put together a team that is what will allow to cross that threshold, to break what they need to break to reach what they actually want to do. The last thing that I would add is that it is quite different, and we do invest in projects that are not necessarily as technical at Lightshift. It is a quite different approach than your typical maybe product-based investment or very business-focused investment, because the way that you have to essentially come to the conviction to invest has to rely a lot more on doing game theory based on systems that are not necessarily as systematic as if you were investing in a business-based investment. So the way that we approach that is we try to get as close as possible to the founders. We try to put ourselves in the position of the founders, and yeah, I think we also have a little bit of an advantage there, because a lot of the team, including myself, we've been founders as well. So we strive to be good at essentially understanding what their challenges are, and kind of from their perspective see will they actually be able to overcome all of these challenges.
Great. I think that's actually a good segue to the next question, which Web3 is kind of notorious for running on hype cycles, and quite like significant hype cycles. The hype is real and the fall is real. It's all It's all very extreme. And many Web3 investors, even the ones who are serious tech savvy, they have this dilemma, or I don't know how to call it, financial nihilism versus, bringing value to the world, where they have the commitment to their LPs to, return profits. And even if they don't believe that this creates real value, or maybe it will be worth nothing, but before it will be worth nothing, it will create a lot of returns. So I'm curious, how do you deal with that dilemma? How do you balance those things out when you look at investment opportunities?
Yeah, I wish I could be a sage person and say like, no, this is not the reality of the world. But like right now, I'm looking at a bunch of AI Web3 companies that I would definitely not be looking at if this was not the hype cycle that it was. And so I would say that for companies in these like bulls and bears are going to be part of fundraising just in general, but you should look at that as a separate part of the equation. Like what you're building specifically, this is kind of on the job of the founding team to create a great narrative and understand what's hot out there, and then understand how your technology basically applies, especially if you're doing deep research into the narratives, right? I see the Monad hat over there. Like, how many times Keone had to pivot specifically, like before parallelized EVM became the biggest narrative in the space. I mean, Say was a live product over there, and it didn't become a narrative until Monad made it a narrative. So, and they're doing some crazy innovations on kind of parallelized consensus with Monad BFT and the Monad DB. But like, so what I'm saying is that innovation and deep research, like as a founding team, you're going to have to be very cognizant of the narratives of the time, and also understand that if there's a way that you can kind of fit yourself into that narrative, like, okay, decentralized sequencer, like you're creating like encryption, and it's like, okay, so mempools are going to be needing to be encrypted. You're going to have to draw that line basically and kind of develop those narratives and try and iterate time after time again. Like it's not like a set process of what you are and how you fit in kind of the stack and of the bull and bear. That's going to be ever changing, and you'll find a hit at some point, but that's definitely on the founding team to kind of do that, and you should do that. Like I would like to say that, hey, if you just focus on the deep research and you just plug along the way, that funding will come to you. Unfortunately, that's not the case. You would definitely, I would say, to give yourself the best bet, definitely understand narratives, understand the market, understand that's the best way of like basically you got to play the game. I don't know. It's not a good thing to say, but I would say that if I was giving advice to like my friend who's a founder, that's definitely something that helps a lot when it comes to fundraising.
Yeah, so unfortunately, I agree with a lot of what Nihal is saying. I feel like, especially when numbers going up, it feels like you're investing and you're playing a game of chess, and you're making moves expecting your opponent to like hang their queen, basically. So, there's a lot of kind of like hype related stuff that just gets funded because they can fit the narrative and whatnot, and the tech actually sucks, and that's really unfortunate. I would say that like during the bear, everyone just wanted to do research and just focus on the tech, and now it's more about narrative, and like crypto trades on virality, so it's kind of by nature of it. Maybe that will be fixed when it gets more regulated and leverage goes down and whatnot. But right now, it's a lot about just going viral, and so obviously the best situation is to have really good tech and go viral. But a lot of times, we see one or the other. So getting that sweet spot is really important for sure.
Yeah, I mean, it's of course a very good question. Adding a little bit to what you guys are saying, from our perspective, we really are a much more long-term investor than we see in the industry. So it's a little bit easier for us to essentially not depend so much on the cycles, especially if we're investing so early. Where, I mean, most of the times there's no lines of code. There's maybe a light paper. Sometimes there's only, a couple of founders that have very high conviction about what they're building. Something like that, especially if it involves doing research that involves tens of people, that can take a decade. And of course, at the end of the day, we're mandated to literally make money to our LPs. And everything that we do needs to be in accordance with that. But the difference with us is that we can do it with a long-term approach, and that's a very big advantage. And then the other thing is that I do believe that as the industry evolves and it becomes more mainstream, and as it becomes a lot more obvious to the participants that are not just, maybe the whoever's setting the price is not necessarily a big native institution, or the degen community that is following a specific narrative, it will change a little bit over time. And we believe that we will be in even further advantage at that moment, because we're always investing from the perspective of, will this actually bring value to the industry and the world in a way where at the same time we're able to make money. So we are maybe dreamers in the sense that we're always looking for a project that gives us both, right? Strong narrative, but at the same time that is bringing a lot of value to the industry.
Yeah, excuse me. It's not mutually exclusive. I think we always get asked, do you want to be right or do you want to make money? And I think that's such a stupid question, because it should be both. And it's possible to be both, but I think that a lot of investors in this space particularly have a very myopic view. If you followed me on Twitter, I shit on other VCs a lot, but it's real. It's a real problem, because VCs are supposed to be the earliest allocators, capital allocators, and supporters of founders and teams, particularly in frontier tech, right? And so when you have these structural flaws of attaching everything to a monetary component, it's very easy to become detached from that. And so I think a lot of VCs are hedge funds that call themselves VCs because they can get in at earlier prices or lower prices. And then as soon as the token launches, then you essentially have a misalignment to the founder. And then as a founder, you specifically Web3 companies, if you do plan to launch a token, you are essentially getting underwritten by like a Goldman or a Morgan Stanley about to launch on the NASDAQ while trying to find product market fit. Like that's ridiculous. So I think this is very important. So like, in order for us to navigate that, I think just sticking with, let's focus on both. I think it's very possible to invest in companies that will actually move the needle in this space while also achieving our fiduciary duty of making money. And I think it's our job to identify the best founders and teams that do that. I will agree with the narrative piece, though. I think that you have to play the game as a founder. And so that's just the nature of the beast. And then we as investors have to decide whether that aligns with our thesis, and then whether it's the right time. But I mean, if you look at Gravity Blanket, like there were heavy blankets that existed in life, right? But they just called it Gravity Blanket. They positioned it in which they made it very attractive to buy a heavy 25-pound blanket for an absurd price. And so all it was positioning. That entire multi-million-dollar company that raised, $1 million over 24 hours was just a positioning exercise, and they got really good at it. And so I urge all founders to kind of keep that in the back of their minds, even if they're building something super technical, super research oriented, to play that game, because it'll only benefit you in the long run.
Thank you so much. I'll maybe have like one question from the crowd if anyone has a question, and if not, we can move forward to the next one. Okay, no hands. Great. So I want to really thank you so much. It was very interesting to me, and I'm sure the audience as well. So thank you for participating, and we'll move to our next session that I actually don't know what it is, but let me check. Thanks.